I'm telling people. Okay. So right now this is just a test run. I'm trying to figure out how to really control this thing. Okay. But the journey to 1,000 steps, beginning with step one. I know this is step one. So um yeah, I'm happy because at least I feel like I'm getting somewhere. So anyways, as you could see on my chart, right, I have two indicators. Um, indicators? Yeah, I have two indicators on the chart, right? This one is called the imbalance detector by log algo and log algo smart money concept. Um, those two indicators, right? So without these indicators, this is what you're gonna see. This is what you're gonna see, a blank chart. But I'm trying to figure out what these lines are. I remember putting those lines there. Oh, is these candle wicks? What? So these are some funky looking candles, right? I thought those was lines on the chart. But these are doji. That weird looking candle right there, they call that a doji candle. But that's 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 weird. I never seen that before. This is current. This is December 21st. That is weird. Let me see if a different pair. Okay, let's use this one. Euro USD, right? All right. So from what I was taught, um, from what I was taught, let's start with the weekly. Okay, so I'm gonna go on the weekly and I'm gonna refresh. Okay, I got some stuff written on here, so I'm gonna delete, control all all of this stuff, right? Um, as soon as I can figure out where to find it. All right, over here. I'm gonna delete everything. Okay, we're deleting everything, starting from scratch. Okay, when you have the when you download TradingView and you register whatever and stuff like that. Okay, you could also at the same time register for a broker. What do I mean by a broker? Um, let me see if I could find one. Normally it'd be down here at the bottom, but I don't see it. Okay, right here. So down here you could click paper trading and you could sign up with them. You could do a wonder and sign up with them. Currently I have a live account and a demo account with a wonder. Um, Not, I am, I'm not being sponsored by them. I'm just telling what me use, which I test out, I wonder. So far, I'm not impressed because we can't trade gold, So I'm not impressed with Awanda and my mind move on from that. Before that, I was using coin CoinX. I think I was using CoinX or something like that. But the problem with that is you cannot control your trade from TradingView. And I just want one thing to trade on. I don't want to trade on a different thing, but I'm marking up my charts on TradingView. More, I mark up my charts on TradingView. And then over here where you see sell or buy, I can just click sell or buy and boom, me at the trade. I don't want I feel jump from TradingView to another thing and yeah. So that's why I'm in the market right now for a broker that use TradingView. So okay, there's a lot of fun tools on here. And in one of my videos, I said, YouTube, University of YouTube is one of my best friends. Okay. And I'm not talking about going YouTube and watch some of these kids or some of these men and women trying to sell you a dream or a course, right? I'm talking about TradingView has a YouTube channel. Forex.com got a YouTube channel. And a lot of Fidelity have a YouTube channel. And on their YouTube channel, they have learning videos where you could watch and educate and learn about what is the stock market, what is this, what is that. Okay? So use YouTube, but just use it smartly. You understand? Like I said, go to the YouTube channel for Forex. They will teach you everything you need to know about all their tools. So if you want to learn how to trade, right, and you need to know how to use a tool, right? How to use a tool. Let me find a tool. Okay, so these right here is to change the candles. You could change it to line. You could change it to the Hishinaki candle or Hishinaki candle, one of them. Um, or you could do the regular, Japanese candles. You can do that. What else they have? They have other little stuff. They have the indicators thing over here. They got the favorites over here. So these are some of my favorites that I have. I have the imbalance detector, moving average, so these are some of my favorite indicators that I got saved. Okay. But the two that I'm currently using right now is imbalance detector and Lagos smart money concept. Algo smart money concept. Okay. Those are the two I'm gonna use. Okay. I'm trying to find the tools because I'm not seeing it right now. I said replay, I said indicators, favorite. I'm not seeing the toolbar, man. I don't know why. Let me see. What's this? What's this? Okay. Don't know why I can't find the toolbar, but there's this right here. So, these things, let's see if some of these as my favorite. All right. So some of these bars right here, if you want to know how these things work, um, like this one is called the Fib retracement or Fibonacci retracement, right? Let me open up another screen. Let me open up another screen. And then let's type in you know, who is, Fibonacci retracement, right? Or um who was Fibonacci, right? And right here, Leonardo Fibonacci was also known as blah 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 blah, and uh so Indo-Arabic numeral system to Europe, blah blah blah. Like basically, he's best known for his Fibonacci sequence, right? Fibonacci is best known for the Fibonacci sequence, a sequence of number which each number is the sum of the two preceding ones. The sequence start as 1, 1, 2, 3, 5, 8, 13, and so on, and blah blah blah. And these things is also found in nature. So just by me hitting images, you might even come across some images. So that's how he's supposed to really look. And these images is the Fibonacci sequence that he predicts, right? And you have it in nature. Hold on, I touched screen, forgot. You have it in nature. You know what that is. You have it in nature, like the flowers, yeah, the hurricane, the galaxies, so this is beautiful, right? Because these are God numbers, and God numbers seem to repeat everywhere. Everywhere you look, God number is repeating itself. So that's a beautiful thing, right? So I love the Fibonacci sequence, right? So that's one of the tools that I use. If you want to know, yo, what is this Fibonacci retracement tool this guy talking about, right? Um, you know, go on YouTube, type in TradingView, and then look for their channel. And then in their channel, they're going to talk about Fibonacci retracement tool and how to use it. Okay. So back to the chart, right? Um, you're going to have the Fibonacci retracement tool. And then, so this is it right here, right? And you click on it. And these retracement, as it say, retracement, it if the market is traveling up or down, right, and it kind of start fizzling it out, you know, by identifying the low of that move, like say right here, um, like say the low of this move right here to the high of this move right here, might be the move, right? The move up. And this move up broke this high right here. You see this high right here? This was a high. And then it dropped from that high, right? But this high got finally broken right here. This leg of move right here broke that high, right? So right then you probably pull out a fib and see how far back the price is gonna retrace to, right? Let me adjust this. Let me adjust this. So let's bring this down a little bit further, right? So you see this move right here? This move broke this high right here. So before anything that was going on, this high right here was maintaining its dominance, this high. And then price broke it. And when price broke it, they broke it with this fat, juicy, like big boy candle, right? So um so price broke. And when price break, you don't jump in for the buy. You wait on the retest. You see all these red candles came down and retest this, right? And they basically respect their gangster, and they had a break of structure. This big old green candle is like another one of these just on a lower time frame, right? And the cycle basically repeats itself. And then this move break this high right here. So basically you have an uptrend, right? Market is trending higher. But this is the beauty of the Fibonacci retracement tool. I'm going to pull it out, right? I'm going to pull it out, and everything I'm telling you about, read up on it, write it down in the notes, and so on and so on. So on my Fibonacci retracement, I got certain settings, I got certain settings in place. So I'm going to draw from the bottom, from the low to the high, from the low to the high, right? And then as you can see, right, you have the 100. These are the, so let me show you what it look like when you click in the settings. So when you click in the settings, this is the visibility on what timeline do you want to see it on, you know what I'm saying? So I'll put it on all of them for now. So on style, right, you have different coordinates, different fib levels. You call these, saying the Fibonacci retracement levels. So these are my settings. These are the ones that I'm using. I'm using the 0. Let me show you what it looked like once I plug those settings in. You have the 0 to the 25. 0 to the 25, right? That is consider um demand zone. What is you talking about, Kimar? Demand zone. Demand zone, when the demand for good is ready, when price is sitting in demand zone, like this is where people go crazy at. They love this price right here. You're gonna have a lot of buying pressure, right? You're gonna have a lot of buying pressure. So I use this rectangle tool right here, and I have some pre-settings already laid out. So all I have to do is this. All I have to do is go up to this little box right here and hit templates. And like I said, I have some pre-templates saved, right? So I said this is demand zone. So I'm looking for demand zone. I already done saved it. You know, you could go up here to the top up here and save your drawing templates. And these are all my drawing templates that I'm saved, right? So now I'm going to click demand zone. Okay, so now I know, right? Now I know that down here, when price come down here, this is a demand zone for the buyers because, you know, they did it before, they could do it again, right? So now I need to identify supply zone because the thing with me, how I'm starting to trade now, right? I don't want to trade in between and I don't want to trade in other people's business. I only want to trade in the supply and the demand because those two areas give you high probability. Because if I had caught my sell, my buy down here, I would have made it all the way up here. And that's probably days, you know what I'm saying, or months. If I'm on the week, yeah, I'm on the weekly. So these are weeks. These are weeks. So this is a large range to cover. You know, I wouldn't recommend y'all try to, because this might take years to actually come back to here or something like that. You know what I mean? So, um, I'm just showing you how to use the Fibonacci retracement. But you would normally pull this out on a lower time frame, like a daily or 4 hour, you know. But and you could go lower too. But this right here, so I got the demand, right? Now I'm gonna do the supply. And demand before I get to the supply, so 0 to 25% of a move. So this move right here, this is the 100% of the move. This is the 0% of the move. This is the 25% of the move. And this gold one up here is the 50% of the move, right? This is the sweet spot that between the 618 and the 50%, this is the golden area. Okay. So I put a box right here. And I'm gonna label this the golden ratio, right? If I could find the if I could find the box. Um, Again, I'm gonna get better with all my presentation and commentation and all that stuff. So don't worry. Okay, this is just a test run. I just want to see if it works. Okay, I'm looking for golden ratio. Boom, golden ratio. So now I know this is the golden ratio. So if I delete the Fibonacci retracement when I'm done, I'm just letting you know that price likes to retrace here. So if you notice, price made it all the way up into the supply and then sell off. So up here is the supply. So let me put another box, right? And the supply is 75% to 100%. Would you buy something that's 75%, you know, marked up above the golden ratio? Golden ratio is the sweet spot. The 50% is the sweet spot. It's not too high, it's not too expensive, right? That's the sweet spot. So this is a fair price to buy Euro USD, basically. This is a fair price to buy. And if you notice, you know, you had a lot of buying power. That's why that candle is so fat coming out of this golden ratio, because this is a good area to buy Euro USD. Anything below that is even better. You know, you're getting to buy it, you know, close to a demand zone or a discount zone, you know, so that would definitely help you, right? Let me get the so this right here will be the supply. So I'm gonna look for supply. Boom, supply zone. So now I have, so look, just without you doing any analysis, right? Without you doing any analysis, I'm gonna tell you what the information you got right here, right? And like I said, we ain't gonna do this on a weekly. We're gonna do this on a lower time frame. But the same concept, you identify the move, He identified the move. They call this is also called a range, right? This is a range. So from here to here is a range. And the reason why it's a range because it broke this high right here. This high over here got broken. So from here to here is a range. And so now we waiting on price to come back and basically test the range, which it did right here once. Okay. But like I said, price likes um to come back and test things, right? So here's where the Fibonacci retracement come into play, right? On your levels, you got 175. I already told you 75 and 100% is supply zone, is selling zone. So when you when market move from a range that you currently observing and you identify the supply, you already know, okay, up in here, I'm favoring sellers. I am favoring sellers. So anything me want to do up in these areas, I'm looking to sell. Okay. Um, and this is on a weekly time frame. So this is definitely selling zone on a high time frame, right? So, and then these are the possible areas price could retrace to. Price could retrace to the 75% and bounce higher. Price could retrace to the 618 and bounce higher, or it could retrace to the 50% and bounce higher. Okay. We, I personally, depending on the day, I will sell down to the 50% and buy up to the 100%. And, if it breaks above the supply zone, then I look for a retracement and then I jump back in for the buy and continue my buys and stuff like that. That's how I would trade. Okay. Hopefully, hopefully, and let's just delete this now, right? Because we got the levels that we really care about, right? So now I could delete this and I could delete this, right? So now I know this area I'm looking for sales, this area I'm looking for buys. I know right here is a fair price, right? So that's just me doing that out of my head, right? Look what happened when I use these indicators, right? And the reason why I like these indicators, it also telling me the high and the low, right? This is the low that of this range. This range, this is the lowest the price got, and this is the highest the price got, right? For that range. When I use the indicator, the smart money concept, look what happened. Um, it tells me the previous week's high, which is up here, and then it's telling me the previous week low. But if you notice, it's only focusing on one candle. That's why I was telling you this is a large area. This is probably years or months. Yeah, these are months, you know what I'm saying? So this is a large area. So the reason why but like I told you, you would do this on a lower time frame, right? You would do this on like a week, on like a day, 4 hour, 1 hour, pulling out your fib, getting your demand zone, your supply zone. But look at this. This indicator is basically saying this. This is what it's basically saying. Your focus for the week is this candle right here. This candle high and this candle low. That's it. So let's clear all of that, right? Let's clear all of that. And basically it's saying this is the candle we focusing on for this week. Okay? We don't care about nothing else, just this candle. So now what I could do is I could pull out my fib, right? Same concept, right? Pull out the fib and I have the high and I have the low. This is the range. Just like how I did it earlier, this is what you do. You click on this and you pull it out and you put it up there, right? And then we're going to go lower. So now we got our fib on the chart. We already know 0 to 25 is demand. We already know 75 to 100% is what? Supply. We know 618 and the 50% is what? Golden ratio, that golden area, okay? So let's go lower. Okay, let's see how to do that. Okay, so I'm on the weekly. Let's go to the daily and let's refresh. Okay, so something look off. How did I get that wrong? It say the weekly low right here, and that's where I dragged it to. But when I go on the daily, it's up here and not at the low. I don't know why. I don't know what's going on. Let me fix it. Let me fix it. Let me fix it. Okay. It's supposed to look like that. Okay. This is the um demand zone. If you notice, a lot of buying pressure in the demand zone. And up here, the 75 to the 100, a lot of selling pressure. So I told you could quickly and easily within a range, and you see the range from here to here is the range, like I told you, the range that broke this high. So this is a range. So you pull out a fib on your range and get your range for that week. Okay. So next thing we'll do is get our boxes going. Okay, I'm gonna put my supply zone right there. Supply zone, because I know sellers up in that area. And then I'm gonna do this one for demand, because I know what? Buyers is in this area. So, and I could even delete it now, but let's just keep going. Let's go lower. And let's refresh this chart. Okay. Okay. So what we looking at now? What we looking at now, people? So we know 0 to 7 to 25%. If price get up in those areas, we know price is looking to buy, right? We know when price is always up in this area, we're looking to sell, and it show you that it's ready to go for the sell, right? So that's what this indicator helps you with. It just cut cut you straight to the point, right? Straight to the point. And I don't know, again, I don't know why it's now showing that the weekly high. I don't know if the indicator lagging or something or what, but this this is the weekly range. So I don't know why it's now showing previous week high up here and previous week low down here. I don't know why it's doing that. Okay. But the indicator, the indicator still works. Okay, it still works. It still show you good information like the choke. Like what is a choke? A change of character. So basically price was trending lower and making lower lows, lower highs, lower lows, you know what I'm saying? And right here it failed. No, and then it make a lower low again, a lower low from that. So this was the last low that it made. But then when price retraced it, price failed right here to make a lower low. And then on top of failing, right? It gave you this bullish run right here. These candles right here, or let me just paint it. These candles right here, it gave you that big old run. It gave you that big old run. You know what I mean? So that was an indicator that price is looking to go up. Then it broke these equal highs. So whenever it breaks something, right, you wait for the retrace. So price broke it, price came up, price touched that line where it broke from, and then price shot back up. Price came back down and gave you a second opportunity if you missed it, and broke even higher grounds. You know what I'm saying? So that's how the market move. Don't feel like the market won't give you an opportunity. It will always come back and give you an opportunity. So don't feel like you're missing out on something, all right? Because that happened to a lot of people that feel like they call it FOMO, fear of missing out. So yeah, you don't want to get caught up in stuff like that. Um, so yeah. Goodness. So yeah, so now we know up in this area is buyers, right? We already know that, and we know up in here is sellers. So we only trade, or me personally, I only trade in those two areas. Okay. I trade in those two areas, and if price is in my golden ratio, my 50% between the 618 and the 50%, if price is in that area and it's an uptrend, so now I need to know, okay, what is this? Is this an uptrend or a downtrend? You know what I'm saying? And right here, we had to choke, we had to change the character. It was making lower lows, lower highs, or higher, um, lower lows, lower highs, because this high is lower than the high above. Lower lows and lower high, because that high is higher, is lower than that high. You know what I'm saying? Fail to take this low out. You know, it's like, okay, now what's going on, right? Then it failed to take this one out, and then it continued lower. So now, because it did that, it gives you a break of structure instead of, it gave you a massive break of structure because it kind of didn't went nowhere for a little bit, right? And then it give you a massive run, um, lower, and then price, came up, but it failed to take this out, and the only, so when it failed to take this out, it came back down and failed to take this out. You know what I'm saying? So now it's like making a pattern or a structure, right? And I say whenever you see a W on your chart, and that neckline of that W get broken, wait for price to retrace back into that area and see what happened. You get what I'm saying? So that's how you mop out the chart. That's how you mop out the chart. Um, so right now I'm on the 4 hour, right? I know that's the demand, I know that's the supply, right? Information I already now know, right? Um, the next thing I use, the next indicator I use is called the imbalance detector, right? The imbalance detector, let's click on it. Okay. And I'm gonna zoom in on a candle. So without the imbalance detector, is like this. With the imbalance detector, it highlights the imbalances. So whenever a candle is unbalanced, so when this candle form right here, this wick right here, when this wick was broken, price never came back and retested it. So price always break and retest. That's why in my community, my old community I was a part of, they always talk about the Rolls Royce, right? And the Rolls Royce basically stand for retrace and retest. So there was no retest from this wick high. There was no retest. Price did not come back. This wick over here almost touched it, but it left the imbalance. So we know price, and I always said it, price don't like to be unbalanced. So I put a line right there, and then what I'm gonna do, I'm gonna look for my imbalance, and I put it right there. That's one imbalance. I see another one on my chart. Okay, that's another imbalance right there. So those are key areas. This one, price already came and tapped and touched it. So if you was up here, you could have set your target. Once you get the confirmation that price wanted to go down, you could have went in for a sale, and you could have set your target at this imbalance. And clearly price went and took it out and then reacted from it, right? So that's how I trade imbalances, because that's where price is going. Put it like that. I don't worry about nothing else on the chart but my imbalances. Because price likes to be balanced, and if price can't be balanced, it's gonna, no, ain't no can't. Price gonna balance itself out, and then it's gonna make its move. Right now, we know it's an uptrend, so our bias is on the upside, right? So since our bias is to the upside, right, I'm gonna delete this Fibonacci retracement. Um, but before I do that, I want to identify the golden ratio area. Um, no. I'm not even gonna worry about the golden ratio area. I'm gonna worry about the imbalance. So now look what we got. We got an imbalance right here in the demand zone. So price goodly return back to this location and go higher, right? So price goodly come in here and go higher. And I would take my target at the high. This is where I take my target. Because if it's a uptrend, then you know price gonna break highs, right? So I'm going after this high. So this would be my take profit, right? Once price come into that area. Once price come into that area, and then price might retrace, you know, somewhere, you know, back to probably the 50% and then go higher again. So yeah. So price might do something like that. You know what I'm saying? So that's my theory, right? That price might retrace to one of these imbalances, right? And then go higher. So let me so I'm telling you based on my analysis, right? And I just covered up the smart money concept. I don't need it right now. I don't need it now, right? I know my range. This is the range from here to here, you know. Actually, I don't even like the fact that it considered this the range high, but up here it's saying this is the range high. So, and then the range low, they're saying it's down here somewhere. So, um, I don't know, but I'm telling you, from here to up there is the range. Um, I was trying to use the smart money concept, but I don't know. I might have to refresh it because it's not acting right. It's not acting right. But you know, that don't stop no show. Let's take the daily one off. Just stick to the weekly. This is saying this is the weekly high. The previous week high, and they're saying this is the previous week low. And that's not true because when you go on the weekly, it's saying this is the high, this is the low. What the hell? All right, let me start over. It's saying this is the high, this is the low. Pull my retracement out. Click on it. I'm trying to get the range, right? Let's check out the daily. Let's see what happens. See? Oh, gosh. So I'm gonna take that thing off. I'm gonna go back to my weekly. And I'm gonna do it manually. That's what I should have showed y'all first. Manually. Um, like I said, y'all shouldn't be able to see this video because this is just me trying to figure it out. All right. So this is last week. This is this week starting. This is last week. So we want last week range, right? So from here to here was last week range. All right. Here to here was last week range. Right. So let's go to a lower time frame and see what that does. Because me want to know why on God's green earth is the indicator keep moving back and forth. So this is the low, this is the high. All right, for last week. Let's go even lower. I just want to show you, say, demand zone. stand true. Supply zone, stand true. So I told you 0 to 25% is demand zone, right? Yeah, demand zone. So if we had known that since last week, right? Because this is December 16th. This happened in December 16th. So if we know this is demand zone, all last week, we could have been looking for buys, right? Buy opportunities. And right now, price is currently sitting in a demand zone. So we should be looking for what? Buys. Up here is what? Talk about it. Supply zone, right? Up here is supply zone. So let's look for supply. Supply zone. We know say what happened up here? Sellers. Look what happened up here. Boom. Big drop off. Right? So these are things that we know. We don't need a psychic. We know. And this is the 50%, Wait, act funky. So let's let's even do this. Let's even identify that one. All right. Just for know say up here, price move funky, 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 at all these wicks, rejection and headaches and making people, so lose their money basically. So now we identify some ranges, right? We have this to here, right? Buying, selling, golden ratio, right? We're gonna go lower. Okay, what are we looking at now? Okay, we see the sell off in the supply, we see the buy in the demand, and right now we're currently in another demand, right? So so we're looking for buys, right? We're looking for buys, and we're gonna take our buys up to the 50% because if we're at the 50%, price start moving funky. And when price break out of the 50%, we look for a retracement, and then we take it up to the 75 to the 100. Okay, that's how we're gonna trade. All right, so moving on, right? We said we're looking for buy opportunity because it's making higher highs. Um, let's go lower. So now we're on the 30 minute. Okay. If we see any buys, what we looking at? Um, and then we're looking for impulse move too. So we see an impulse move right here. Impulse move is like, all the same candles, just like big candles or, massive momentum pushing candles, right? And right here, you could see some green ones. So this green one right here, from this rejection down here, price shot up, right? And phased out right here. So this range right here, you could pull out a fib and see, okay, how far did price retrace, right? How far did price retrace? So price retraced it where? Price retraced it in the, below the 25%. And what I told you, in these areas, you've got buying pressure. So look what happened. Once price came into the demand zone, price shot up and it went past the 50 to the 618 and then it started fizzling out. So, you know, take your money, saying I'll say the 50% or in the middle between the 50 and the 618, it would be my take profit. Because right after that, price started moving sideways. You see, it wasn't going higher or low. Price just started moving sideways. So that's why it's very important to probably take your money right around there. Okay. Because then what price did? Price drop and took this low out. So even if you had a stop loss right here, price came and touched that. So if people had their stop loss below this, their stop loss got taken. So these are some of the things, that make people lose their money. Okay. But we know this is bias for buyers. The buyer, but the buyers that want to take advantage because this is buying territory. Okay. This is buying territory. But yeah, this is a cool tool, the Fibonacci retracement. Um, identify your supply and demand zone, because I only trade in my supply and I only trade in my demand. Okay, so this is where I'm looking to take my buys for this week. Okay, when it comes to Euro USD. Um, and what I'm looking for is another impulsive move. And the reason why this buy didn't work, or the reason why the buy is not ready to activate yet, because what happened when price broke up here, right? Price came back down and price failed to take out this high. You see this high right here? Price failed to take that high out. And whenever price failed to take something out, man, it ain't ready, and that means there's no confirmation. So you're waiting for a confirmation right now. So price need to take it out. Price need to take it out. Price need to retrace back into an imbalance area. So you're gonna look for a untouched imbalance. So far, all these imbalances is taken up, except for this one. So there's a little imbalance right here. So price goodly come back. Do whatever price do, price gonna goodly come back to this demand zone right here. And there's the coordinates right there. And then I'll take my buy from here, up to I'll say the 50%. And if that trade happened to go while I'm up and stuff like that, I might even just close out half of the position and then let the rest run. Because sometimes price would go past the 50 and just keep going up. Or sometimes it would do, like I showed you, it would move sideways and then drop off. Okay. So, yeah, that's the 30 minute. Okay, let's look at the 15 minute. 15 minute. You see that impulse move? We know buyers is strong in this area, right? And like I said, price retraced it back into the demand zone and then took off, but it failed to take out this high. And that's when we have problems. And look, that's when people lose their money. So if price fail to take something out, if you're in profit, man, just what I'm saying, just count your blessings and just get out. Get out of the trade, you know. Get out of the trade, because look what it did. It took out this low right here. It took out this low, and this was an impulse move. This was an impulse move, but this impulse move failed to take out this wick. And when you fail to take out something, price gonna drop again. You know what I mean? This move right here took out that wick, but it failed to take out this move. So yeah, it has to take out the previous high. And this was the previous high. And price failed to take it out, so price dropped lower. Price failed to take it out. So until price takes out, this is the last high. So when price take this out, you're gonna see. I mean, if I put this smart money concept back on, you would see where it say change of character, stuff like that. And look at this equilibrium. So this indicator, yeah, it's lagging, but this indicator right here is showing you a special area. And I just identify it for you. Equilibrium is also known as the 50%, like a fair price. This is where the market consider a fair price. The market also just created another imbalance. So let me label that as imbalance. So the market also just created another imbalance right here. So You know, I use these as, the magnets, because price gonna come back and test these. So best believe those two areas gonna get touched. Okay, those two areas gonna get touched. These are equal highs. So price is telling you that here is equal to this. So that's why I like the indicator, because the indicator telling you what's going on. Right here, this impulse move right here created a choke, because it took out these highs, right? So it's letting you know, hey, I'm looking to go for buys now. I'm looking to go for buys. Okay, so it's just got to get the sellers then to believe that they're going for a sell, and make them go into a little bit of profit. And the buyers them who already knows going for a buy, but you jump in too early, yeah, we're gonna take your money too. You know, we're gonna take your money too. So that's what they do. They take the buyers and the sellers' money before they actually make their move. So, like I said, we know the market is biased. So We ain't gonna chase that down. We don't chase money down. Okay, we let money come to us. So whatever that do, because you want that to go all the way. You want this move right here. You want this move to take out this high right here, this premium zone. Because if price do that, if this move right here take that out, then you know this move, this area is valid. So when price come back into this area right here, you look to take your trade. You look to take your trade. You know, either there or there. You know, you look to take your trade. Okay, those two areas is the areas I look to take my trade for my buy. If this candle happens to break all the way above here. Oh, I don't see it. All the way above here. Okay? If these candles could break above here, then this is telling me that these two imbalance is very key. All right. So that's the test run. Okay, and then um you could use the Fibonacci retracement tool that you also just learned, right? And you could you know, that could be your first target right there. Okay. This the 38.2 could be your first target right here. And so let's see what happens. You know, we could follow this, and we could see what happened, you know, during the week. Okay. But this is how you trade, yo. And then proper risk management, you know, proper risk management. But you know, the goal is to get from demand to supply. So eventually throughout the week, you know, we looking to take higher positions. You get what I'm saying? So yeah. All right. I'm gonna stop this recording now. And then watch the tip over, you know, and then see what it's looking like and stuff like that. But until then, you know, this is Kimar from Kimar Can Help. Hopefully, me showing us some stuff. Hopefully, me explain some stuff. You understand? Yeah, the smart money concept is not perfect, clearly, but it tells you some key information, yo. It tells you breaks of structure. It tells you chokes, you know. And for some people, you know, you might not understand what it look like. What does a choke look like? Or what does an equal low look like, you know? The guesswork, it takes it away from you. So that's why I like the indicator. Maybe I laziness, who knows? But you know, me can do it both ways. Me can show on the both ways. Me can show you the manual way, and me can show you the way with the with a little bit of help. You understand? Not having too many help is not bad. Okay. So, or not having help is not bad. Okay. It's a good thing to have help. All right. But just don't let the help become a crutch, because if that become a crutch, then you know, it's not good. So I'm on the 15 minute. We're watching market moving. I don't trade on Sundays, or I hear people say don't trade on Sundays. So, you know, I'm not gonna trip on a Sunday. Okay. I'm just gonna watch this. And like I said, if we see that breaks out of that, then we know that these imbalanced areas is what we're looking for. So by Monday, we're looking to take ourselves, our buys from that area. Okay. Again, this is Kimar from Kimar Can't Help. All right. Have a blessed day. All right. This is how me do it. Okay. I mean, know how nobody else do it. This is how me do it. Okay. And like I said, identify the key areas that you trade in. I trade in my demand and my supply. That's it. All right. All right. So yeah. I know I said it earlier, but yo, I love you. I hope you learn something. I hope you write down and take some notes. Okay, I gotta watch this recording. Either I cuss, you know, in a good way, are excited saying it actually work. Okay, so yeah, salute.